What is good, YouTube, and welcome back to another banger. It's another bootcamp day, and I'm gonna be pulling in two videos today because we've had a break. I gotta come up with the days of the bootcamps. Very bad for me. That's my bad. I got a good amount of views on the last video. I really appreciate it. For the people watching it. But yeah, welcome to day 8 of the bootcamp. Today we're talking about structure, and when I mean structure, I don't mean high level structure. I mean get me like no entries, no setups, or no indicators. That's not it today. Today is just understanding how price moves, and all that. The basics. But yeah, let's start with the basics actually when we talk about it. Market moves in impulses and retracements. An impulse is a strong directional move, and a retracement is price pulling back just before continuing or reversing. And yeah, as I can say, this happens on every time frame, the hourly and the 15 minute, the 30 minute. You can go on every time frame, and that's how it works. But let's talk about highs and lows, because this is one of the most important things in trading. An uptrend gets created by highs and lows, and downtrend gets created by highs and lows. An uptrend is simply higher highs and higher lows. For an example, right here, we have a high right here. We get a higher high. Okay, no. Let me explain it very goodly. Let me actually just go. I'm gonna go on the market. I don't normally trade, so just say gold. It's on gold too. I'm not sure it is. Let's take this then, okay? It doesn't really matter. Boom, right here. This is our low, and right now, this is our high. What do? We create a new high, and that high is higher than the previous high. And the same with the low. This is our new low. What is that? That's higher than this low. And when it's a downtrend, is literally just the same thing, just the other way around. Lower high and uh, lower low. So there's not that big of a difference. I mean, it sounds simple, but most traders complicate it more than it has to be. And that's where people get confused with is doing transitions. Price doesn't instantly flip from bullish to bearish. It usually, at most of the time, is not always, of course. It usually ranges, breaks structure, and then confirms direction. And this is where patience really matters. But let's talk about clean structure, because this is also a very important thing. Clean structure means price moves clearly without excessive wicks, chop, or randomness. When structure is clean, levels get respected, moves are so smooth, and reactions makes sense. When structure is messy, fake fake breakouts increase. In, there's a bigger chance of fake breakouts happening, and probability drops. This is why sometimes your strategy works absolutely perfectly and other times it doesn't, even if you did everything right at the same time. It's not you, it's the structure. Right now you don't need to trade structures, you just need to recognize it as an experienced trader. And that's like some of the most important things is looking at the market, because people think oh, now I learned a strategy and I can get into trading. I just get so much money because this guy on YouTube does it and he does it for real. Okay, we checked him out. He does actually get a good amount of money for real on trading. And okay, nice, that's good. So now I'll just use his strategy the exact way he does. Normally, it's the same thing I do. Bootcamp, I only do 70% of what my actual strategy is, because why would I give out free money like that? It doesn't make sense, and my strategy would just become absolute horrible if everyone did it. You get me? That makes good sense. I will maybe make a course about it. because that'll just be so much work for me. I've worked so much to make the strategy for you guys to just get it free. That doesn't make sense, and people always takes it as a bad way. Oh, he's so structured now. He's ass. He doesn't really trade. That's not how it is. Um. So yeah, really just get that through your mind. Strategy and everything. Market structure is a lot of. I would nearly say more than the strategy. If you know, cause me as an experienced trader, I've been doing this for like a year and 9 months, around that now. 10 months. It doesn't really fucking matter, but I could really see a change in every day where I just, okay, I watch the market for 7 hours a day, and then the next day where I just the day before watched 7 hour the market for 7 hours. I could just see, I could predict so much more, and you become so much better if you know, and if you're experienced in the trading market. If you can see how, if you can, it's so easier to predict what happens. Um, when you do that, yeah. So yeah, um, that I think that's really it for today. Not a long video, but I feel like that's really what we had to pick up on. It's just highs and lows, bear how if the market is bearish and all of that, higher highs, higher lows. That's really the basics of this. And yeah, so peace out. Yep.